Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, tighter regulations or an outright ban on online gambling. With policy direction still a toss-up, the Philippines' fintech players ramps up safeguards to protect consumers. We speak with Fintech's founding chairman, Lito Villanueva. The Budget Department reminds government agencies to stick to the proposed 2026 budget to prevent insertions. And Moody's latest report reveals banks that embed risk management into operations thrive in a time of uncertainty. Yasmin Mukadam of Moody's joins us live from Dubai. Several lawmakers
course, meron nang nag-prepare ng kanyang speech, meron mga nag-advise sa kanya. Pero ang gusto ko sana, wish ko lang, hindi naman siguro masama mag-wish. Sabi nga nila, hindi naman siguro masama mangarap, libre ang mangarap. Pangarap ko sana sa SONA, baka pwedeng isali ng, sabi ko, Bekenemen, hindi ko dinidiktahan, hindi ko sinasabihan ang ating Pangulo. Ako'y nag-wish lamang na sana makarating sa Pangulo kung gaano kalala na itong problema sa online gaming. Let's be practical. It will take some time dahil maraming harang. But at least we're doing something and we're gonna fight for it. And for the meantime, habang wala pa yon, I'm calling upon PAGCOR, I'm calling upon AdBoard, DICT. Magtrabaho naman kayo.
No amount of government revenue can justify the human cost of this evil pastime.
Hindi po tayo maaaring magpadalos-dalos dito. Dahil minsan ko po, kapag ka po mismo ang legal at license na mga online gaming sites ang iyong ibaban, mas dumadami ang mga illegal na online gaming sites. So pinag-aaralan po yan ng Pangulo.
Fintech Alliance includes major players in the digital finance sector such as Maya, GCash, RCBC, CIMB Bank, Cebuana Lulier Bank, Tonic, GoTime Bank, GrabPay, Sendit, and Smart Communications. Well, with us now for more is Fintech founding chairman Lito Villanueva. Good to see you again, Lito. Welcome to the program.
Thank you for having me again, Cathy. Good morning.
Good morning. So what are some of the steps taken so far by Alliance members in, say, the last 48 to 72 hours to immediately address, access, and protect consumers?
You know, we have intensified efforts in making sure that we can provide the consumers more protection insofar as having to control the supposed, addiction to gambling. And in fact, we have received the draft circular of the BSP, and we are really pushing for that immediate enforcement. In fact, we even suggested additional controls or safeguards, and one of which is really having to ban celebrities or influencers in promoting online gambling, and also having to come up with geofencing within 1 kilometer radius of schools, churches, and hospitals, and having to also have a clear mandate amongst PSPs or the payment service providers, online payment or the operator of payment services to secure prior BSP approval or authorization for any onboarded licensed or legitimate online gaming operators. And another thing, Cathy, is also having to set transaction velocity checks, to curb excessive use and prevent financial harm. And one of which is just similar to how you operate casinos, for example. You have to provide show money, making sure that you have the capability to really to gamble or to be inside the casino. In this particular case, if your wallet balance is say below 500 or below 100, you should not be allowed to bet or to participate in any online gaming or gambling. And one of the things that's as well is if you are now playing online, and if you have an online gaming transaction account, which should be 1:1, you will also be banned to access any online lending platform or facility. So making sure that you will not be able to lend or to borrow money for you to use for for online gaming or gambling.
It's a lot more guardrails than what the Bangko Sentral has proposed. Could you give us some idea of how it's being deployed and how you're intending to put this on scale for the Fintech Alliance members?
Yes, one of the things that we are really pushing is making sure that we standardize all of this, guardrails, making sure that all licensed and covered institutions within BSP, framework would have to follow these initiatives. The thing here is that some players already pushing for it or already applying those safeguards. And there are some that are yet to apply those guardrails. But the thing here is that we are based on the circular or the draft circular. They have 6 months by which they have to conform in making sure that they can comply with all of these requirements or regulations.
Now, you've recommended to regulators the imposition of reasonable restrictions on access to e-gambling platforms. Could you elaborate exactly what reasonable restrictions constitute, now that you've just mentioned that you've implemented a couple more guardrails than what the Bangko Central's proposed?
Yes. Well, having to define, that reasonable guardrails or safeguards would definitely be relative, right, or subjective. So it really depends on how the operator or the e-wallet provider or PSP would have to adapt to that, right, and making sure that, say, for example, they could set the limits for as low as, say, 500 or 1,000 or 100, making sure that only those who are capable of betting or being part or gambling would be allowed to participate, right? And having to make sure also of having to leverage technology for us to do, as I've said, geofencing, even in those areas where there is high poverty incidents, right? For example, in rural areas where there is a high concentration of 4P CCP beneficiaries, we can actually ban the use of, or restrict the use of online gaming platforms in those areas. So I think these are some of the initiatives or some of those guardrails that we are trying to implement amongst the members of the Fintech Alliance.
What's your view of a total ban on e-gaming?
When you say, it depends really on government on whether they would implement a total ban or a partial, partial or how would I say it, partial ban. Because again, as I've said, even before this online gaming or online gambling has been in existence, all these PSPs or e-wallet providers have been in existence. So with or without this, they will still operate because the very essence of us being part of this ecosystem is really to provide digitalization across payment sector insofar as having to provide ease of use, transparency, and efficiency.
Now, there's that view and that perspective of concerns that regulatory controls might limit innovation or even disrupt legitimate business operations. How are you now going to strike that balance in order to thrive in the setup that we have now?
Thank you so much for that question, Cathy. I mean, that's actually one of the pillars by which Fintech Alliance was really created, to make sure that we provide, we support BSP and we encourage BSP to provide an enabling regulatory framework that would further encourage or promote innovation. So all of these regulations or controls are not supposed to stifle innovation. And the thing here is that, as I've said, the technology must be technology for good, and technology has to be utilized and optimized for the purpose of legitimate use cases and for to promote common good. So I think, as I've said, all of this safety nets or safeguards that we are implementing in partnership with the regulator are in place to make sure that we can really provide, at the end of the day, it's really more about having to come up with social outcomes and social impact at the center of all of these things.
Social outcomes including data privacy and, of course, user privacy. How can the Alliance balance then enforcing compliance with avoiding privacy concerns or excessive surveillance of users' financial activities?
Well, again, it's really meant to control, well, quote unquote control, insofar as having to address the potential abuse or potential, addiction to any vice. No, I mean, you have vices like smoking, drinking, or now gambling. So I think it's really more about having to ensure that we have those controls in place. And I don't think any data privacy infringement would be an issue, because, as I've said, it really boils down to having a massive educational campaign or financial literacy programs that would be directed towards the users themselves. So it's really making sure that, again, it takes two to tango, making sure that the entire ecosystem, all stakeholders are well aligned to make sure that we can really support the government in educating the public against the abuses of online gambling and gaming.
Indeed, consumers do have their own responsibilities as well. Thank you so much for your insights, Lito Villanueva of Fintech Alliance Philippines. President Bongbong Marcos approved the You're watching Money Talks. Coming right up, U.S. inflation rose in June as higher tariffs start to show in prices. And we speak to Yasmin Mokadam of Moody's on how banks embed risk management into growth strategies. Keep it here on One News.
Confidence is soaring, incomes are up, prices are down, and inflation is dead. It's dead. We have a bad Fed chairman, really bad. If he would lower the rates, and I tried being nice to the guy, it doesn't help. He's like a knucklehead.
Meantime, Trump settled another tariff deal with our neighbor country, Indonesia. Trump agreed to lower tariffs on Indonesian goods entering the U.S. to 19%. competition from fintech accelerates, how can traditional banks lead with smarter risk? Moody's research reveals how leading institutions in the Asia Pacific have started to embed risk management into growth strategies. With us now for more, live from Dubai, is Yasmin Mokadam, Senior Director, Head of Banking Practice Group at APAC and Middle East at Moody's. Good to see you and welcome to the program, Yasmin.
Hi, good morning, Cathy. Thank you so much for having me.
Yeah, you know, your research pieces drive us right into the intersection of risk, data, AI, and strategy in banking. So how are leading banks in the Asia Pacific carrying out that shift, where risk is seen as a gatekeeper to risk as a strategic partner?
So, Cathy, it's very exciting in banking at the moment with the pace of change, both in terms of obviously the evolving macro environment that you just talked about as part of your headlines, but also with the adoption of things like GenAI and the impact that it has on risk and strategy. And you're absolutely right. I mean, traditional risk has been viewed as a gatekeeper or more like a policing function. But what we're seeing more and more in APAC is essentially more and more risk is being involved at the strategic partner. So not just as part of risk management decision-making, but also as part of growth initiatives, with banks trying to essentially balance risk and reward. And this is essentially being done by bringing risk earlier to the table for things like, product development, into structuring smarter deals, and also with a full view of risk and rewards into decision-making around, allocations of resources within banks, which is basically quite precious at the moment.
Yeah, really
And
a lot
essentially,
of opportunity there, Yasmin, when you come to think of the amount of data available, but it's really fragmented. So how are banks overcoming that challenge of making sense of fragmented data to enable the early warning insights?
Yeah, so fragmented data, fragmented systems, data quality issues. This has been a challenge for banks and the whole industry now for a long time. If we think about data in the context of early warning, it really needs to do two things. It needs to be smart, it needs to be forward-looking, ideally cover an integrated view of risk. And I don't mean just financials and credit, but also it needs to be fast. So essentially institutions need to be able to get enough time to intervene before risk escalates. Now, in our research, we basically look at a number of different ways that banks are working on this, and these are initiatives around, improving accessibility to the data by various different stakeholders, looking at initiatives around reducing duplications, and also around improving the process and governance around it. But one of the most innovative ways that I would say that's been leveraging GenAI by essentially looking at real-time data integration, to looking at that. Essentially merging live data from various sources, but also incorporating predictive capabilities, leveraging GenAI. So this is deploying AI-powered early warning systems to essentially make sure that we're identifying risks before they develop.
Right, an interesting time for traditional banks because they're getting a lot of competition from the fintechs out there. What examples might you have of the successful partnerships or innovations that are already deployed in this space?
Yeah, so you're right. Banks are under pressure. Obviously, fintechs are a little bit quick off the ground when it comes to approval timelines and so on. Now, in our research, we talk a lot about these innovations and even have some case studies of some of the success stories from practitioners and so on. But these innovations are geared to either improve efficiencies, enhance customer experience, get a more holistic, accurate view of risk. And also, we look at essentially some of these cases around how essentially these helped with the automations and so on. Now, the banks have managed to achieve these innovations. They essentially look at three things, right? And this is more efficiency around credit assessments. This is reducing lending turnaround timelines, but also improving consistency. And there are essentially a number of banks at the moment within APAC that are looking at those three things, actually integrating it and going live as we speak today.
Innovation typically moving ahead of regulations or regulatory guardrails, as we were talking about just a few moments ago. How is that evolving, the regulatory landscape, and how traditional banks are working with that while deploying advanced analytics, as you mentioned, Gen AI?
So you're right, regulatory scrutiny is definitely increasing around Gen AI and advanced analytics. I mean, non-compliance is never an option. So it's always important to have that view of regulation as we move forward. Now, we have to remember the evolving regulatory landscape is really not a new concept for banks. So this is something that banks have had to deal with now for many decades. They've been constantly evolving, innovating, complying with different sets of regulation. But what is important to remember is that it's always about balancing that innovation with oversight, because obviously those guardrails become very important as we move into uncharted territories. And that really starts with assessing how it impacts current practices like governance, like compliance, and then obviously how advanced analytics itself is being used for decision-making, how verifiable it is, how explainable it is, but also, improving dimensions that maybe banks have not focused on so much so far, like, for example, cybersecurity practices and relevant dimensions like that.
Yeah, which brings us to trust and really bridging the gap between innovation, building that trust with customers and regulators around the use of AI and data analytics. So what are banks supposed to do to establish that trust?
Yeah, you're right. So trust is a critical barrier for sure. Also in the adoption of Gen AI, as well as we essentially discussed this with banks and regulators. But I mean, regulatory compliance remains a key focus, right? For banks who are adopting Gen AI, there's a lot of discussion around, accountability, around ethics, around data privacy, around transparency. And obviously in relation to wider adoption of Gen AI, but I mean, there's so many things to discuss, but if I was to summarize what really successful banks are doing in this space would be, establishing AI literacy teams, so having a cross-functional governance function around this, it becomes very important, and that brings that regulatory foresight into the picture. Data integrity and model transparency and explainability, that is, again, very important. And it's really geared and actually powered with high quality, well-audited data, which is basically very essential for innovation. And also collaboration. And collaboration is both with customers, so education, explaining the safeguards and things that has been put into place, but also collaboration with regulators as well. And what that does is basically build the trust and, creates that track record that becomes important over time.
And it all comes down to customer experience and really making the most of it. Thank you so much for your insights. Yasmin Makadam of Moody's joining us live from Dubai. It for Money Talks. I am Cathy Yang. Catch us again tomorrow at 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.